All right, team. So today we got the Meta earnings call. We also have Jerome Powell that's supposed to be. Um, so we'll check out what Meta has to say. What's up, Mark, Stacy, Victor? Again, Meta earnings today. Let me get some music playing here. We also are supposed to have Jerome Powell coming out today. I'm not 100% sure if the speech is going to be live or not. We're going to try to cover that as well. Again, this has the chance to help or hurt the markets. I'm not sure which one it's going to be. And yeah, we'll have to wait and time will tell. It's okay. Yeah, very, very red day. Again, we're going to do a poll. Are you bullish or bearish on today's Meta earnings report? Bull or bear, vote on the poll. We got this poll live. We're also going to do a poll on Twitter. Again, Powell's supposed to speak. I'm not sure where it's going to be broadcast. See if we can find it. But everybody's hyped up for the Powell speech. We also found out that the protesters last week were climate protesters. You see Meta sitting right at the 300 whole dollar level. If you don't hear the music, you should be able to. I'm looking on the Fed site. I mean, the last I heard, James, Burry lost like a bunch of money from his latest play. I've been hearing that from a bunch of different people. I mean, but again, here's the spy on the year. You know what I mean? So like saying, "Hey, we're gonna crash," and then getting like a 5% pullback. It's not really a crash. You know what I mean? But I don't know whether Powell was right or not. It just depends. Nobody knows where he actually entered, but from what I'm hearing, he lost a bunch of money, and I've heard that from a few different people. Uh, Another thing I heard was that he was net long, and that the shorts were just a hedge because he never actually commented on what it was. You know, but I mean today we're down like 1%. So I mean, you know. We'll see if Meta has the chance to make this dip get really heavy though. And pull up Nzinga or Discord. On Amazon, yeah, Amazon might save it. So yeah, looking at the poll numbers. Sorry, sunflower seeds. 68%, roughly 70% are bullish. Interesting. 30% are bearish, roughly. Right, exactly. Stacks. I heard from a lot of people he lost a bunch of money from those option trades that everybody was talking about back in June. But I mean, I don't know for sure. I mean, it's all speculatable. Again, hit the like button if you haven't already. I'm looking at the journal. Mike Johnson elected House Speaker. You can see Meta bounce a little bit at 300. I don't usually take. I mean, I'm holding some of these stocks that have earnings. Like I'm holding Google, I'm holding Microsoft, but they're longer term plays, so they're not really short term day trades that are gonna really negatively affect me from like these earnings calls. You know, so like I'm investing in a lot of these companies, but I'm not, really getting hurt by these earnings calls. They're long term plays that I can sit on. Meta at 300 right now, 300. Yeah, I'm trying to see where we can watch the Powell talk. But I don't actually see it anywhere. Mid to August today, SPY and Q are almost flat. I doubt he bought anything less than 6 months out. He might still be right nonetheless. Yeah, I mean, again, I said this earlier. I think short-term traders have this huge habit of waiting for like 1% drops in the market and then trying to be like, see, I told you so. But again, like zooming out shows you what we're actually in right now. Like if you actually look at this trend, I think a lot of people get wrapped up in politics and wrapped up in all this different stuff. But the yearly trend is this. Like, the last 52 weeks are this. Right? So the last 52 weeks, we really got like a nice little upward trend that, is playing out to look like that. It depends on what economic, stuff happens though. We got GDP data tomorrow, very relevant. We've got, GDP tomorrow, PCE Friday, Amazon earnings coming out tomorrow evening. So it's all pretty relevant stuff, and they do have the ability to influence the market, especially Meta earnings today. It's a pretty big day. It's really, really relevant. We definitely want to pay attention to it. And again, vote on the poll if you think we're going to get anything good. Again, slap the like button, hit the subscribe button if you haven't yet, and hit the notification bell. We cover all this stuff. All right, so SPY is still dipping down though today. Pretty rough day when you look at it on a short-term perspective. We're at 417.50s right now, 417.50s. Yeah, if Meta fails today, it's going to be really bad, trouble for the market for sure. I think, you never know for sure. It might be weighted on Amazon more than Meta today, but it's definitely not going to be good for Meta if it fails, of course. Gonna be drinking some coffee. Meta's still consolidating very flat. You can kind of see it chopping back and forth around this $300 level. Meta failing and Jay Powell being hawkish could be, it could be a tough time for sure. Burry is looking at structural factors, not trends. You probably knew he'd be wrong short term, but buying puts when the market goes up is good, and that you buy them away cheaper than when it starts falling. Yeah, 100%. Microsoft starting to trend upward. We'll see. I mean, I hope it does, man. I really do. Microsoft at 340s right now. It's trying to climb. Microsoft's still doing okay, holding most of its gains. Microsoft's a heavily weighted stock where it could prop the market up for sure. I'm not saying it's going to, but it could. Drinking some coffee here. Yeah, we'll see. I hope it hits. It's also the blackout period, so I don't know what Powell's going to be doing here regarding the speech. I'm looking for it, and we'll cover it if it happens, but so QCOM announced new AI chips as competition heats up. All right, so we're at 300 on Meta, 300. Been at this level now for a minute. Again, Microsoft at 340.30s. Tesla at 213. So Tesla's even more weak. Been struggling for Tesla here for sure. Somehow my average is 205 on Tesla. I don't know how. What else drops earnings today? If Amazon hits with their cloud service, they'll make up for Google losses. Maybe. You think the market is down because of Meta? No, I think the market is down because of Google mostly. You know, Google is down pretty heavily over the last couple of days after their earnings report. And what's weird is that they reported good earnings, but like this is a very negative reaction to earnings. This is why I always tell people, like, you don't know what kind of reaction the market's going to give you. You don't know if the market's going to give you a good reaction, bad reaction, up, down. You don't really know. Google, from all intents and purposes, did pretty well for their earnings report. They came in better than expected for EPS, better than expected for sales. The only thing that was slightly negative was their cloud revenue, but that tanked Google all the way down from 140s to 126, just a huge drop. And that's been what's weighing, really, that's what's been dragging the market down more than anything else is this, right? So this has been tanking the market more than anything else. And it's ultimately why we've seen such big bearish action over the last few days. You know, and then tomorrow, again, we do have some chances to prop the market up. Again, tomorrow we have, specifically, we have, tomorrow we have GDP data, right? The actual GDP data. It's expected at like 4.2%. And so, you know, we'll see what happens. But GDP data tomorrow, PCE data, personal consumption expenditure Friday. Yeah, Amazon earnings are the big story today for sure. Penny stocks, man. Tesla started to break 212s, 213, still breaking down. Might drag the rest of the market down. Again, Google's really to blame for the drops. It's not really Google's fault. I mean, they did well. The market just kind of reacted in a weird way, man. Again, here's the SPY at 418s, 417s. Google just, or Meta just broke under 300 for a split second. When is Amazon? Amazon's tomorrow evening. Yeah, but what's weird, E6 says all hope on Powell's speech. His last speech practically started the downtrend. True, like you might think that, right? But we're in a blackout period, so he can't technically speak on the economy right now. He can't technically speak on economics. He can't speak on the economy. He can't speak on rate hikes. We're in a blackout period right now, so he's just doing the introductory remarks. And I don't even know if we're going to be able to find a stream for it. If we do, we'll cover it. If not, we're just going to stick with Meta earnings. Again, Google tanked from earnings for sure, and you know, Meta still got some time before their earnings report. Everything drops at 4 p.m., so in about an hour or about 30 minutes or so. Let me see exactly when the numbers come out. All right, so Meta at 4:05. We got IBM as well, ServiceNow, a couple other ones. Does my mic sound bad? Let me see. Yeah, sorry guys. Oh, dude, I never. There we go. That should be way clearer, way better as a mic. My bad, guys. I was using the wrong mic. I was using the camera mic instead. It's just not clear. So this mic should be noticeably better. Jerome Powell is speaking. Yeah, so Jerome Powell is speaking today. I think it's at technically 4:35 market time. I believe. I'm not 100%. I'm pretty sure that's when it is. But I don't know if it's going to be streamed. I'm looking. I don't see them actually broadcasting it anywhere or anything like that. So, from my understanding, we're not going to actually see Jerome Powell. A lot of people talking about it, but there's not any way to watch it. Yes, S&P's down about 1.25%. Again, not the end of the world. I'm seeing if I can find anything else about it, but again, I think he's technically in a blackout period. I don't think he's actually allowed to you got a lot of just kind of bot news stories posting about this stuff, but all right, so I'm looking at Meta still holding 300 like a champ here. Again, I hope it continues to be able to hold. We'll see. Still holding it pretty well, though. Again, Meta earnings are expected at $3.62 a share. Meta's expected at $3.62 a share. We'll put this up so you can actually watch. On revenue of revenue is expected to come in at $33.52 billion. So we'll see if we hit it or not. So here's the expected number. You can see the SPY starting to bounce back a little bit. Meta's still sitting there. Hey, what's up, BG? Techs are expensive. Yeah, poor analysts. Yeah, so he's in a blackout period, not allowed to talk anything FOMC rise, right? Bane listening to market analysis. Google will go down to 80. Nah. I don't know. Look at the SPY start to rip up. I'm trying to look to see what the reason for this is. I see Apple. You know, Apple's kind of flat today. Microsoft's fighting back. It's at 351s. You know, that might be why the market's looking better. Bro, I went to jiu-jitsu again, got Ezekiel choked again. I got out of it. I didn't actually tap, but like now my trachea hurts again. So it's not very fun.
So at noon, we had an open board meeting. But that's over. Look at the Feds. The Fed's been having some struggles with their freaking streams. So maybe they're going to stream this on the Fed side, but I don't think so. Again, Microsoft dragging the market back up. Meta so flat ahead of the earnings. This is Meta right now in anticipations of its earnings report. You know, very choppy ahead of this report, which is kind of the normal. You know, that's kind of what normally happens. Again, hit the like button, hit the notification bell, run the like numbers up. All right, so again, 418.20s, dude. Meta so sideways. I'm looking at Apple. Apple, slight red day. Microsoft had earnings yesterday, and they killed it. Tesla is down at 213s, around lows. AMD and other microchips. Where's NVIDIA? NVIDIA having a tough day as well. NVIDIA was basically back up to the 440s yesterday at the close yesterday. So now heading into the close, NVIDIA all the way back down under 420. It's at 418s. It's certainly being one of the reasons for the downward pressure today. And so, again, I'm seeing if we can find Powell. But I don't think we can. So I believe Powell's at 435 in exactly an hour. And again, we'll stream it if we can find it. But let me see. How important is moving over the 200? Which I like the 200 EMA. It's all pretty similar, but it's all pretty similar. But I like the 200 EMA. How much you make a month trading? It depends, man. Every month's different. Sometimes you have good months and bad months. I don't claim to be an expert or a profitable trader or anything like that. I'm just a news channel, resource, and community. I mean, we day trade, but we mostly cover economics. Right now we're streaming Meta earnings, and so how much I make day trading is not really super relevant, I think. We day trade every day at the opening bell, but my channel's called beginner trading because I'm not out here slanging courses, selling stock picks, trying to be a day trading guru. I think the world has enough day trading gurus, and I think what happens is that they just end up kind of fabricating things where I would just rather be real and sleep good at night. And so I just tell people, look, I'm not an expert, not a day trading guru. I think most people are going to lose day trading, and that's okay, but it's a skill that you build, but it just takes time. My TOS account's got what, 60K in it, 50K in it. So, we trade stocks a lot, you know. Nvidia CEO, yeah, Nvidia earnings are super interesting as well. New Meta glasses can live stream to up a half hour. It's not enough for me though. I cover a little bit more, you know, a little bit longer. All right, team. All right. All right, so let's look at our meta votes here. So again, you can vote on this poll that we just posted right here. 82% are thinking meta beats. 18% think they miss. Looking at our YouTube poll where we got noticeably more votes at 161, 55% are bullish on meta earnings, 45% are bearish. So again, meta earnings could help or hurt the market depending on obviously if they come in good or bad. If you want to vote on this Twitter poll whether they're going to beat or miss, you can check out that link right here and let us know. I like it. It depends on which one. I mean, on a 1 minute time frame, you can use it. On a 5 minute time frame, you can use it. Again, on a 5 minute time frame, it depends. Okay, it really depends. Like, it depends on what's going on in that individual stock and how extended the stock is relative to the 200 EMA volume weighted average price level. Again, it depends on what it is. Okay, if we look at a 1 minute chart, you can kind of see those are usually a little bit closer together, but this is a really red day, and so it's a little bit more difficult to judge that. I look for like stuff like this very often, like yesterday on the SPY, for instance, right? Like I look at them like milestone levels. Like the way you have to look at technicals is as milestone levels, right? And what I mean by that is you have to look at technicals for what they are, which are technicals, right? Like technicals work because people think they work, right? And so with it's all based off of psychology. You know, you're trying to find what the most people are looking at. And so in that regard, I look for moving averages and indicators that I know a lot of traders are watching, that have heavy consolidated volume of traders, specifically the 200 EMA, the volume weighted average price, very heavy volume. Like a lot of people are like, yeah, the 9, the 12, the 15, the 20 EMA, you know, the 37, you know, EMA mixed with the 36, you know, 2 crossovers and all these crazy stuff. And it's just like, man, listen, you're misunderstanding what these indicators do. They're trying to give you understanding and like technicals of what people are watching. And so when I look at these indicators, I'm trying to watch 2 different ones that a lot of people watch, right? And so in this case, you can see one of my favorite strategies is looking for kind of like a cup and handle breakout where we get a pullback and then we finally rebound back all the way back over that level. And then we pull back to that level, right? The 200 EMA volume weighted average price. And then I just look for a bounce off of it. That's my favorite strategy. That works really well. I use it on the downside as well, and that seems to work fairly well as well. And then again, some days when they're really close together after you get that, you can kind of see it here where it trends together. You know, you have the 200 EMA, you have the volume weighted average price, and then we pull back to it and you get a nice little bounce level here. Something I do pretty regularly, but everybody's a little bit different. Better hope this pumps over 420 before close. Yeah, maybe. We'll see, KC. I'm not sure, dude. Honeywell earnings. When are their earnings? Tomorrow. We'll see. I'm holding a little bit of Honeywell. All right, team. Sorry, scrolling back. All right, so again, SPY is sitting, let's see where we're at right now. Again, SPY is sitting all the way down at 417.50s. We still got 15 minutes until the close and about 20 minutes before the actual Meta earnings. Any other ideas? What do you guys think we're going to get today for Meta earnings? Let me check my history. One of my headphones is messed up. All right, dude, Meta has not freaking moved, which is kind of crazy because, like, if you look at how little it's moved, it just hasn't moved at all. I guess the whole market's waiting for it. MACD, EMA, Fibonacci. Bunch of nonsense. Yeah. I mean, 200 EMA works because other people watch it, though. Like, that's the way you have to understand it, is that it works because other people think it works, right? So, like, that's what technicals are. Technicals work because other people think they work, right? And so when more people think they work, they end up buying it where they pull, like where the indicator is, and in turn it bounces. But it's only that and that alone. It's not any other reason, really. Remember to switch my headphones out before the call, too. The call's in about an hour. All right, so yeah, trading economics. It's not an interest rate projection. Okay, so I'm looking at, again, Powell's supposed to speak at 3:35 today. As of now, I don't know if this conference is going to be televised or broadcast. Now, next week we got the rate hike decision. Even if the conference is broadcast, we'll try to cover it, but he's not going to be able to say anything regarding the economy. Jim Cramer, man. Honeywell bouncing up a little bit. All right, so there's Meta under 300 at 299.50s here. At 299.50s for Meta. It did break down under 300. Yeah, for sure. All right, so there's the Meta breakdown. So Meta just cracked lows at 299.30s. I mean, again, Meta still had a freaking really good year. Meta still, guys, is at, like, even right now, Meta is still up, you know, hundreds of percent this year. And so, again, a pullback like this, a lot of people are just so used to bullish action that they think every pullback is the crash. It's just not. We still have a lot of time. And again, we'll see what happens. Again, looking at NVIDIA, I think NVIDIA is very relevant to everything too. Maybe AI is going to have some influence over this stuff, but we'll see. We got 8 minutes before the close, and then we got another 5 or so minutes before the actual earnings come out. Also, other stocks dropping earnings today are, we got Meta, IBM, O'Reilly, QuantumScape, Mattel, Baker Hughes, Edwards Life Sciences, United Rentals, and that's it. Yeah, so here's a Meta long-term chart. The last earnings report was July 26th. So the last report came out here. And they actually reacted pretty positively from the report. Meta's down a little bit relative to where it was the last time. What do you think, hit or miss? I really have no idea. I usually try not to speculate on what we're going to show from these numbers because I think anything can happen. And I think Meta is, I'll tell you this, Meta's down a lot already. And again, this is in a period where tech is falling fast. And so I think anything can happen. I'm not sure what we're going to get. The CEO of HSBC is warning that debt threatens to spark a global collapse. All right, so Meta dipped, hit 299, bouncing back up. SPY still sitting pretty flat. The whole world is essentially waiting for Meta earnings today. We'll see, man. We got 6 minutes left until the close. What is the quickest option to getting earnings numbers in general? Right here. I'll cover it very quickly. You know, we usually get thousands here because we cover it quick, especially for the big ones. Meta's, I would say, medium to large earnings report. It's not like the largest one we'll ever do, but it's pretty big, and we'll see. But we'll cover it very quickly, probably faster than you'll be able to cover it yourself, you know. All right, so we're testing 299 again. Again, will Jerome Powell's speech move markets? I'm not sure. All right, team. Let's see if we hold here. Again, we got about 4 minutes until the closing bell. Again, other big stocks are Meta, IBM, ServiceNow, Align, O'Reilly, KLA, QuantumScape, Mattel, Baker Hughes, all dropping at the closing bell today. Meta specifically scheduled for 4:05, and then Amazon is tomorrow. So, again, we got 4 minutes. So the expectations might be right below me right here. So again, Arif, expectations might be right here. It could say Meta's expectations. It might not, but it might say it right below my face right now. Just a weatherman it, right here, like right in this little general, area. Are you planning on trading Disney? I'm in Disney. I'm green on Disney. At least the last time I looked at it, I was green. I mean, Disney's down. I'm slightly red in Disney now. But again, I'm holding 20 shares of Disney at this point in time. I've already taken profit at the 86s. And so we are down $9.70 right now on Disney on the trade. And so again, no matter what Disney does, we've already taken profit in there. And I haven't been confident enough to add it back lately, which should tell you something, because usually I'm pretty optimistic in Disney. I'm usually a pretty big dip buyer in Disney. I just don't trust it right here. I'm going to let the market settle down a little bit and head into the holiday season before I start to add some big size, I think. Again, Bitcoin almost back up to 35K. A lot of people are migrating to crypto right now. And, a lot of people scared going to crypto. All right, guys. Hey, we got 3 minutes. 3 minutes, 3.5 minutes technically, but 3 minutes. Again, they're technically scheduled to release at 4:05 p.m. Eastern Standard Time, 4:05 p.m. We also have Powell supposed to be speaking at 3:35. All right, guys. Hey. Whew. I don't think, again, I think we're in a blackout period. I don't think we're going to have any crazy big market related speeches from Powell. Not from my understanding. Now, I might be wrong, and I'm checking on it. But I'm pretty sure, I don't see much, dude. Again, if I see anything relevant, we'll see, but... Again, Powell's scheduled for 3:35. Here we go. We got less than a minute, guys. Less than a minute. Hit the subscribe button. Hit the notification bell. I hope you guys do. Appreciate the love. Look at Meta bounce. Meta up to 300s here. Meta scheduled for 4 p.m. 4:05 technically Eastern Standard Time. And then again, we're also supposed to have Powell speak. I'm not sure when he's gonna, or I'm not sure if it's gonna be broadcast or not, and we'll cover it again. We got 30 seconds, guys. We're also gonna throw it in sub-only mode, so if you have not already, slap the subscribe button. We appreciate it. Let's get ready for the Meta earnings. Here we go. Meta earnings dropping live pretty soon. Here we got 12 seconds until the market closes and stocks get ready to release these earnings. We'll try to cover IBM as well as Meta, as well as O'Reilly, as well as QuantumScape and Baker Hughes. But here's the closing bell. Meta closing right at 299.50, right at 299.50. So watch for volatility to come in place here for Meta. We should get a big gang of volatility show up right now. It's at 299.80. So now remember, Meta's technically scheduled for 4:05. Meta's usually pretty well on time with this type of stuff. And so again, let's watch the market action. Meta's up to 300.5. Up, went a little bit higher, waiting for Meta, waiting for Meta. Getting some volatility right at the closing bell today in anticipation for these earnings. Meta at 300, chopping back and forth. Let's wait. IBM scheduled at 410 technically. All right, Meta ripping up. Meta up to 301s. 302.50s. Because Meta numbers might have been released early is what this is. It could also just be volatility here. We'll see. Looking at IBM. Nothing. Meta at 301s right now. It's not the biggest move. SPY's starting to head up too. Meta's scheduled for 3:05 or 4:05 p.m. in 4 minutes. 3.5 minutes is what they're scheduled for. Again, we don't know what they're actually going to show, but yeah, we'll see. All right, Meta at 301.30s. You know, again, I think a lot of people don't understand. Again, I think a lot of people don't understand economics because they don't understand that Powell's not actually going to be able to comment on rate hike decisions. We're in a blackout period ahead of next week's FOMC rate hike decision. All right, guys. Here we go. All right, so 301s right now, guys. 301s. We got a minute and a half. A minute and a half. We got about 800 people here. Whew. All right. Let's get ready. Will Powell affect the markets? I don't know. We'll stream it if we can. I don't know, dude. Yeah, but Powell's not allowed to talk about rate hikes or the economy right now. He's giving opening remarks. Very brief opening remarks. It's not going to be related to markets at all. I mean, we might cover it, but again, a lot of people are like, ooh, Powell. And it's like, dude, Powell's not going to be able to say anything. All right, look, here goes Meta earnings. We got less than a minute. Speech is at 4:35 market time, 3:35 my time. All right, here we go. 50 seconds. Now's when you really want to watch the volatility. Meta testing lows at 299.50, 300s at 300s. All right, guys, it's judgment day for stocks. Let's see if we get something good. Yeah, his color of the tie will say everything. If it's purple, it means red and green, choppy. If it's red, bearish action. If it's, green, bullish action, obviously. All right, here we go. Hey, we got 15 seconds until the scheduled release time. We're at 301.50s. We're starting to see a little uptick in volatility for Meta here. We're getting close. We are getting close. All right, here we go. There's the 5 o'clock or the 4:05 level. This is when it was technically scheduled to release. No release. They're late today. Is that a good or bad sign, guys? Let me know. Tesla at 212.70s. All right, watch for some candle wicks here. We're at 301s. Again, no data out yet. You'll be able to see when the data drops. You'll see a big candle show up. There's a candle. There's a candle. All right, we're out. We are out. Big candle there. See, a big candle. All right, we're at 292s. Big drops in Meta. Guys, big drops in Meta. Down to 290s. 290s. 280s here. 280s, team. All right, bear with me, pun intended. 290s. Yeah, I'm not actually seeing. Okay, Meta. No, KLA is out. 288s. I don't actually see the results yet. I'm looking for them. Usually they're pretty available. All right, so big rebound here. Maybe these are the numbers. 296s. But nobody has the numbers. Weird. 294s. Let me look at the chat. Anybody got the actual numbers? Because I'm not showing them right now. All right, we're at 294s. So if the numbers aren't out, why are we moving like this? Somebody taking a big position? Let's see if we can find Meta EPS. Oh. Mattel just dropped. KLA just dropped. I don't see any other platform with this numbers either, your team. We're looking right now. Nothing. 296 is right now. SPY rip it up pretty big. Look at the SPY rip. So maybe we're getting some type of economic movement here, and the market's following it up from that is the only thing I can guess. So maybe Meta's not out with theirs. I see Mattel's numbers. We'll put the Mattel numbers in chat right now. Interesting nuance of the market right now. Again, here's Mattel numbers. We'll put those in the comment. All right, they beat. We'll see 1.91 billion. All right, we're at 294s. You know, people are saying they beat. We're at 296 now. But yeah, a lot of people are saying the same thing. It's down. We don't see anything. Earnings not out yet. IBM is out. IBM posted 220 EPS versus 213 estimates. Revenue of 14.75. They expected 14.73. So IBM beat. Again, we're putting these numbers up. There's IBM. We got Equinix, EQIX dropping numbers. KLA is out with their numbers as well, but I don't see Meta. I see Mattel. Weird. Meta was scheduled for 4:05. They're usually on time. Yeah, so people saying Meta numbers aren't out. People are just panic selling. A lot of people are specifying as well. No Meta earnings yet. We're at 296s on the chart though. So weird, weird almost 1% drop in Meta. The SPY is on its heels right now. Meta's not out yet. Again, I'm sure we'll see an even larger move once the numbers are out. At least I don't see anything. And again, I'm checking multiple sources. All of them are basically saying they're not out yet. And so we're on our heels right now waiting for Meta team. Yeah, I don't know. It could be a bet. I don't know what's going on right now. IBM is out. KLA is out. Mattel is out. Southwest posted some news. Yeah, you remember when? Yeah, I remember when Nvidia was late, Jason, and everybody was freaking out because it was like a crazy day. It was right in the middle of AI hype. It was weird. 4:30. All right, so Meta was expecting, bro. Even the earnings, one of the earnings sites I'm using is like weird. Probably from people like looking. Yeah, nobody knows Meta right now. We're fighting back up. We're at 298. The earnings calls at 5 p.m. Marcia, and so the earnings calls are at 5 p.m. ServiceNow is out, IBM is out, Mattel is out, KLA is out, Meta. See, this worries me. It worries me for a few reasons. One of the main ones is like, okay, if the market is having such a red day and they're fearing the market's reaction to Meta, maybe they could delay it a little bit to prep for a potential catastrophic release. Bitcoin shooting up in this unknown at almost 35K. It's at 34.9 thousand right now. Meta's still sitting at 298. Yeah, IBM is out. IBM is right here. You can see the numbers right there. Again, let's watch for volatility. I don't mind it because honestly, it lets more people join the stream. Like we got 1,200 people here now because Meta's late. So I don't mind it, but like it's a little, for lack of a better word, it's a little sus. You know, my son's a big Among Us player, so I don't know. I don't know if it's bad news or not. Again, Powell was supposed to speak as well. And that is back up to 300. So I don't know what the dip was. I assume that was earnings, but it wasn't. And so, hey, hit the sub button, guys. I mean, listen, we're here covering everything for you. You're welcome. Meta's acting strange late on its earnings report, back up to 300. Bitcoin almost back up to 35K. Powell's supposed to speak in 20 minutes. All right, so we're still at 300s. All right, so there's a pullback at 297s for Meta at 297.40s right now. Yeah, Powell's speaking today, but now we're getting some movement here on Meta. We're at 298s. Weird, man. All the other big earnings are out. Again, we got Whirlpool, Molina, Equinix, IBM. IBM beat on EPS, beat on revenue, sees fiscal year revenue constant plus or minus 3 to 5%. So slightly better than expected for IBM. So I think IBM beat on their numbers here. You can see IBM's numbers right there. So IBM gapping up to 139 after beat on EPS, beat on rev. Good guidance. We also had Mattel beat on EPS, beat on revenue. KLA beat on EPS, beat on revenue, and that's it. We had Whirlpool, again, beat on EPS, beat on revenue. Molina, miss EPS, beat revenue. And then again, Meta's the big boy today. IBM pushing up. Maybe we're getting some sympathy here. But yeah, we're just kind of sitting tight, guys. The actual earnings call is at 4:50 or at 5 p.m. So we're gonna stream the full earnings call as well here, team. So don't worry. I mean, we're gonna stream the call live also. But this is just weird. You know, this is weird and a very red day. Yeah, I mean, now is up. ServiceNow and beat EPS, beat Rev. Meta's right under 300. Yeah, Powell's not allowed to talk about interest rates. I mean, I know you're joking, but like still. Pew Pew Powell. I like that name for Powell. Pew Pew Powell. Meta has had bad earnings and they want Powell to cover it up. Powell's not going to be able to say anything regarding the economy or rate hikes. United Rentals just released. They beat EPS, beat Rev. Edwards Life Sciences, EW, beat EPS. Or as expected EPS. As expected for revenue. Man, that's odd. Both as expected here. Again, we're waiting on Meta. Meta's super weird right now. Again, this is freaking odd, dude. Again, the only other... Okay, here we go. Meta's out now. There's 307s. 307s. All right, Meta is actually out now. Meta posted... Revenue was... Let me see what the expected number for revenue. Revenue was 3.4 versus... Or 34.5 million. They posted 34.14 million. So higher than expected revenue. They're now dipping down pretty quickly, though. Let's see what their EPS was. They got third quarter operating margins. Again, Meta posted 439 EPS versus 363 expected revenue of 34.15 billion versus 33.56. Beats on both metrics for Meta. Finally out now, you know, a full 10 minutes late. Better than expected results. You know, it's weird though, because again, Google yesterday posted better than expected results and dropped massively. Meta finally starting to rip back up a little bit, up to 305s here for Meta. Again, very strange, very strange. Post these on Twitter. Meta ripping up to 310. Will this save the market? It looks like it's saving it a little bit. It's helping the market some. That's for sure. Up to 310s. Meta trying to go green on the day after better than expected EPS, better than expected sales. Again, I'm going to go ahead and read the CFO outlook here. It says, quote, we expect fourth quarter total revenue. So here's some guidance here for you, team. We expect fourth quarter 2023 total revenue to be in the range of 36.5 to 40 billion. Our guidance assumes a foreign currency tailwind of approximately 2% year-over-year total revenue growth in the fourth quarter based on current exchange rates. We anticipate that our full year 23 total expenses will be in the range of 87 to 89 billion, which is lowered from our prior range of 88 to 91 billion. So good guidance for Meta, lower than expected 2023 guidance for expenses, and higher than expected 2023 fourth quarter revenue expectations for guidance. So better revenue expectations for Meta, higher than expected revenue expectations for the fourth quarter, less than expected 2023 total expenses. They said, quote, we are also sharing a prelim outlook for 2024 expenses, capital expenditures, and our tax rate. We expect full year 24 total expenses to be in the range of 94 to 99 bill. We continue to expect a few factors to be drivers of total expenses in the growth of 2024. And again, so Meta, way better than expected EPS, slightly better than expected revenue, and also good guidance numbers, which we're going to put up on chat. So again, better than expected guidance for Meta, basically 40 billion versus 36.5 billion expected for guidance here. And this is pushing them up really quickly, really quickly. The market honestly needs this. You know, this is what I always tell people. Everybody acts like they know what's going to happen. They're like, yeah, the market's going to crash, guys. Meta's going to do terrible earnings. Nobody freaking knows what anything's going to do. So why act like it? You know, like nobody knows here. Meta doing great. Again, Meta could turn all the way back down under 300 today and then tank the market down. You really don't know. Google posted better than expected results yesterday, and the whole market was bearish from it. So earnings are weird. Y'all be careful. Again, Powell's scheduled to speak in about 15 minutes. About 15 minutes for Powell's speech. Is NVIDIA flushing? Yeah, NVIDIA's dumping down fast at 411s right now for NVIDIA. I wonder why. Again, good guidance. Palms are sweaty. Vomit on the sweater already, Mom Spaghetti. All right, guys. Meta, way better than expected EPS at $4.39 a share versus $3.63 estimates. Way better than expected. Revenue slightly better than expected. Total chaos. Honestly, I'm for it, man. You know, it's good for my channel. Like I said, we got 1,300 people here, so I'm okay with the chaos. You know, pun intended, I guess. Bear with me with all these results. You know, we'll see what happens. Meta's definitely not bearish. It's at 310. Again, we'll see if it holds. We're over pretty big levels. We're over it. Look, these are all the milestone levels that I see specifically on the chart right now. We got 300 here, milestone level. We got the volume weighted average price. We got the 200 EMA all around the same spot. So Meta should hold. It doesn't mean it will, but it should. If guidance is, guidance is good for Meta. And again, companies can react good or bad, but typically when they have good guidance, they hold. Not always, though. And again, we can see the previous closing price, which is the level at which Meta closed from red to green, green to red. We'll see. Again, NVIDIA dumping heavy in pre-market down to 410s right now. I'm not sure why. Again, so Meta sees quarter 3. Facebook daily active users at 2.09 billion, up 5%. Facebook monthly active users up to 3.05 billion, up 3%. We're going to put these numbers on screen as well. What about Powell? Powell's probably not going to speak about the economy or the market itself. Yeah, I'm looking at other pages to see. I don't think any of them are going to cover. Powell, again, we're at 310s right now. 310 might be a heavy level here. We'll see if it holds. Again, but Meta numbers are out. Again, Tesla at 213s right now. Meta's making that push. Again, if it can hold over 312.50s, it'll be technically green for the day, which is interesting. Again, also, if you want to check out one of my sponsors, check out TopStep. If you want to day trade some of these economic reports and earnings reports, again, if you look at the S&P and then you look at Meta, very similar price action. If you look at Meta today and then you look at the S&P, very similar. You can day trade. You buy market, buy bid, sell the ask, the E-mini and futures, and there's no PDT rule, and the patterns are very similar to stocks. Look, here's Meta. And then here's the E-mini on the left. And again, you can day trade this left one here and with no PDT rule in futures. And TopStep's the most legit futures funded program in the world. They give you a demo. They test your skill. If you can hit the target without hitting the max loss and following their rules, they fund you the same amount as the demo. The base one's $50K. It's only $49 to take that challenge. And just taking the challenge builds your skill, but if you're good enough to pass it, they'll fund you anywhere between 50 to 150K. They pay out millions every year, fund thousands of traders a year. And again, most day traders lose. Again, I'm always transparent. They're a sponsor of mine. And so I'm incredibly biased in their favor because they pay me money. But genuinely useful for new traders. I lost thousands when I first got started day trading because most day traders lose. And this is just a cheaper way to get started, learn how to trade. And if you're good enough, you can get funded with a 90% split. If you're not good enough, you're going to lose much less than you normally would. Meta pushing up, guys. I'll put that link up in chat if you want to check it out. Meta ripping up, though, breaking highs. Looks great. And we'll see what happens. There's the link right there. You can also find the link in the description if you want to check it out. But look, Meta testing the highs of the day, almost up to 316 now. Again, we're going to stream the full Meta earnings call live as well. 5 p.m. is when the Meta earnings call starts. This is quarter 3, right? I think it's quarter 3. All right, guys, Meta up to 312s. Again, the S&P 500, E-mini at 4,200s right now. NVIDIA is really kind of weighing down the market, though, if you look at it. Yeah, a lot of people are happy for that. Hey, good luck, man. I hope you guys make some money for sure. Again, this is definitely helping equities. I mean, it's dragging it up. Meta's a pretty heavily weighted stock. Powell's speaking in 10 minutes, but he shouldn't say anything regarding the market. And I don't even know if they're going to broadcast this Powell meeting. If y'all could find it, let me know. I don't see Powell speaking anywhere where they're broadcasting it anywhere. So, I mean, he's doing like a very brief introductory remarks. And from my understanding, nobody's really covering this. So, maybe, but all right, we're up to 313s, 314s. All right, guys, Meta pulling back. It's at 310s. I always paper hand got out of 308s. Hey, thank you, Kevin. Congrats to Stefan for making his first trade. Yeah, we got a Powell speech, but again, understand Powell is in a blackout period where he's not actually allowed to talk about monetary policy and financial decisions right now because we're in a blackout period ahead of next week's FOMC meeting. And so Powell can't even talk about the economy right now. Everybody's like, oh, Powell today, Powell today. It is like, it's true. Powell does a brief introductory remark and with some type of like, conference, but it's not going to be related to the economy at all. So it's not going to be actually related to economics at all. It's going to be based on, it's going to be based on, I don't even know what he's going to say, but it's not going to be about rate hikes next week. Again, remember, next week we got the rate hike decision. All right, guys, we are at 310. 310. So, yeah, Powell is scheduled to speak. Just to give you guys an update, he's scheduled to speak at, I can look at the FOMC calendar. Powell's scheduled to speak at the 2023 Moynihan Lecture in Social Sciences and Public Policy in Washington. So, unless they're live streaming that, which I'm pretty sure they're not. We'll cover what Powell says during the speech, but right now we're getting ready to cover Meta earnings, which again are going to be live, or which are already live. So be ready. Hey, thank you, Jesse. JP can talk about the economy without talking about the economy. Wink, wink. Yeah, what color is his tie? If his tie is red, hey, maybe he is going to crash the market. If his tie is green, optimism reigns, I guess. I don't know. A downward trend, I don't know. What color will Jerome Powell's tie be? Let me know in chat. Will it be good, bad, red, green? Purple? I think last time it was purple, which means choppy action. I think it's like red plus green equals purple, right? I got to remember my colors. Does red plus green equal purple? Chat, let me know right now. Does red and green equal purple? Subliminal tie. Yeah, I mean, Meta's not saving the market. The market's still down a lot right now. Tesla's still down. Nvidia's really weak right now. I'm not sure why, but Nvidia's down big today. So the FTC is seeking to substantially modify our existing consent order and, quote, impose additional restrictions on our ability to operate, end quote. Also, Meta expects Reality Labs operating losses to increase meaningfully year over year due to ongoing product development effort in the AR, VR, and investments to further scale that ecosystem. They said, quote, we expect 2023 capital expenditures to be in the range of 27 to 29 billion, updated from our prior estimate of 27 to 30 billion. Hey, shout out to you for the donation, Star Chaser. Thanks so much. I don't know how much. 10. Okay, thank you so much for the $11. Shout out to you, brother. Thank you so much, man, for the 10 Swiss francs, brother. Thank you so much. I appreciate it. Genuinely appreciate the support. Thanks so much, man. All right, hey, we still got 900 people here, guys. And listen, in 30 minutes, we got the actual earnings call, which we will cover and stream live as well. Again, there is no real Jerome Powell stream right now, that, from my understanding. And next week, we got the FOMC meeting. And again, right now, we're in the blackout period ahead of it, which means that they are not actually allowed to say anything regarding, you know, the economic policy decisions. So, you know, if you type in, it's the Moynihan Lecture in Social Sciences. I don't think they have anything live today. Nope. There's not even any way to watch it. So, I mean, again, if he says anything relevant, we'll tell you, but I don't think he's going to. I usually cover all the Powell decisions, but this is one that is not really super relevant to markets, I'm pretty sure. Again, there's Meta. Here's the E-mini. Here's the Q. Dude, I got Ezekiel choke today, man. My trachea hurts, which means the choke was wrong. You know, my trachea is not supposed to hurt. I didn't tap. Maybe I should have tapped. But, yeah. Anyways. Yeah, Meta did great. NVIDIA looking really weak. Look at NVIDIA right here on the left. NVIDIA dropped all the way down to the 410 level in pre-market. Bounced all the way back up to 413s. Meta's starting to pull back. Again, he better not Elon Musk this earnings call. You know, Elon Musk freaking comes out with the Tesla earnings call, which is what sparked all this bearish action in markets, right? Elon Musk comes out, says the Cybertruck basically sucks and that they're not going to make any money on it for years. The first two sentences of the earnings call. Great job, Elon. You crashed the stock market. Yeah, Meta pulling back. Still green. Again, we're pulling back to the volume-weighted average price, the 200 EMA, the volume, the previous closing price. We're all right around where we are. The $300 whole dollar level seems relevant too. Even though Starlink and SpaceX are not part of Tesla, do you think they have any weight on the stock? I think they have slight sympathy movement relative to what they do versus Tesla, but I think it's slight. I don't think it's like heavy. Yeah, Powell's technically, they say he's going to speak at 4:35 market time. So they say he's going to speak like now. But again, we'll see. I don't know. Again, y'all remind me to switch my headphones out before this earnings call so I'm not sitting here panicking about the stream dying. Meta's not reacting to Powell's speech because there is no like way to watch the Powell speech, you know. And if the Powell speech isn't televised or broadcast, it's not really going to move markets because there's not enough people there moving markets. He's also not actually able. Yeah, I'm looking on all the other places like that usually have it, and I don't see it. So I don't think anybody's covering this Powell speech. There's not even a link to it. I'm pretty sure nobody's doing the Powell speech. All right, so again, Meta tap 302 up to 304s right now. All right, team. Look at Meta bouncing back up. It's at about 307s. NVIDIA at 413.50s here. We can look at the SPY as well. SPY's still kind of red today, man. I mean, it's pretty red. It's down like a 1.5%. It's not the end of the world red, but like when we start to break over like 2 or 3% in one day, it's pretty drastic drops. Now, again, we're nowhere near a crash at this point in time. The SPY would have to drop down to like 380s or 390s or 370s or 380s to really be considered a crash, and it'd have to happen quick. But it certainly doesn't look good. Certainly starting to get kind of bearish, you know. And again, what Powell said the last time he spoke was that he thought some of these rate hikes would start to influence the market in the following year. And that's not generally good. I don't know if this is a red candle or not, or a real candle or not, but NVIDIA has a very green candle right now, all the way back up to 418.70. If this is a real candle, and we'll see in a couple seconds if it is. Nope, it's not a real candle. Okay, so it's just a fake candle. The Meta's moving a lot. The actual earnings call is scheduled to be released here in 24 minutes or so. What the? I gotta go see what this is, man. Something's making some weird noise. Sounds like a dinosaur out there. Hold on. I don't know what's going on out there, man. Like I said, it sounds like a freaking dinosaur. All right. Powell's supposed to be speaking right now, but again, I don't... There's not really any conference here. There's not really any way to watch it. Nobody has coverage over it. You look everywhere. Nobody's really covering it. Nobody cares about it. And his brief introduction, it's probably pre-written intro remarks, not relevant to what's going on today. Meta earnings are the big thing. And we got like 20 minutes before the call starts. Yeah, again, this is what I've been telling everybody. Everybody's like, oh, Powell today. And I'm like, look, tell me you don't understand the economy without understanding it. Listen, for the week preceding the FOMC meeting, Powell is not allowed to talk about rate hikes or economics, like current economic like decisions. He's not allowed to. It's called the blackout period. It's for like, I don't know if it's a week or a week and a half. Let me look this up. So yeah, they generally do not speak publicly between a week prior to the Saturday preceding a Federal Open Market Committee. So it's a week past Saturday. So it's like a week and 4 days. Going on where, G26? What is this? Is it Powell outside? You know? Look at the Fed Reserve. Oh, there is a Powell. Okay, so look, I got the full list of the introductory remarks. So these are pre-recorded. All right. Okay, I'm gonna go ahead and read the Powell remarks just because everybody's talking about it. So I already got the script. Okay. So just imagine I'm Powell, and this is quoting Powell. Okay. Quote: I am delighted and honored to introduce Professor Alan Blinder as this year's winner of the Daniel Patrick Moynihan Prize. The Moynihan Prize honors those who champion the use of informed judgment to advance the public good. In the field of economics, I can think of no better example of such a champion than Alan Blinder. The very heart of his distinguished career has been advancing the use of informed judgment in economic policy making. As Allen has observed, in our political economy, there exist two neighboring tribes sharing a common interest but separated by cultural and language barriers. On one side of the border, there is the academy, particularly social sciences, who work to assess the costs and benefit of public policies, actual and possible. On the other side, there are policymakers, including elected officials, as those who work at the various government agencies. And folks on the academy side generally feel that the policymakers would make better policy if they paid more attention to academic work. Meanwhile, policymakers often look across that divide, desiring that academic work pay more attention to the practical realities of policymaking. Like Moynihan himself, Alan Binder is that rare person who both transcends this barrier and recognizes its significance. Look, this is like a lot more. It's too long for me to read. I'm going to post this. It has nothing to do with the economy. As I told you guys for the last few hours, you're welcome. But if you want to read it, which is not super relevant, and unless you want to know a lot about this dude, Allen, there's the link in the chat. You can check it out. Yeah, so basically, we don't know what color his tie is. And I don't know what's going to happen. Microsoft at 339.60 is pulling back a little bit now. Meta's still holding. Yeah, he's ChatGPT. Yeah, all good, G. I was in the market in 87 and 2000. I'll tell you this. If you see top companies like Meta blow away earnings, revenue, and guidance and then sell off, the bull market is top down and about to fall. Maybe. But, I mean, again, if you're in those markets, you'll understand that it's never super predictable in that way. You know, I'm going to buy 50,000 in Meta right now. Be careful. Cry about it, Piccolo. Dragon Ball Z sucks. I woke up at 4 a.m. thinking it was an important Powell speech. Well, back to sleep. Hey, yeah, go to sleep, bro. It doesn't matter. None of it matters. I mean, I'm just joking. I like Dragon Ball Z personally. I grew up in the 90s. Okay, so that was like, you know, that was like the cool thing. That with like professional wrestling. What else was cool in the 90s? Street Sharks. I saw Vin Diesel in the commercial. Yeah, there's a lot of fake ones too. All right, so again, Meta bouncing up. It's at 310s right now. We'll see if it holds. So apparently there was like a catfish stream. All right, Meta's starting to pop back up. It's at 310s. You think this is my burner phone, bro? Listen, you think this? Bro. It's an expensive burner phone if that's it. This is one of those Z Fold 4s, bro. You know what I mean? If it is my burner phone, bro, which I don't even have one, that's an expensive ass burner phone. Sorry for cursing. News or noise charts are the real drivers. Yeah, we'll see. Yield inversion starting to near positive. Historically, this was very accurate in predicting a recession. What do you think? Yeah, I think the yield curve is interesting right now. And what they mean by the yield curve, guys, is an inversion means that short-term bonds pay more than long-term bonds. Also, what we're seeing now is bond prices are paying out so much, bond yields are paying out so much that they're outperforming the conventionally more risky assets like the S&P 500. You know, the normal convention of this is that bonds generally are bonds are guaranteed money, treasury bonds. So like you're guaranteed to earn whatever the yield is in those bonds, right? Right now you earn about 5%, a little bit less than 5% annually. So if you buy 100K in treasury bonds, 10-year bonds, and you basically loan the government 100K for 10 years, you're going to earn $5,000 a year on that. And then at the end of the 10-year period, you're going to get your 100K back. So you're basically going to make close to 50% over a 10-year period by investing into treasury bonds right now. With that said, you know, the S&P 500 conventionally pays out more than that. You know, on average, it pays out about 10% a year, but it's obviously much more risky because it's not guaranteed, and the market can do anything when you consider macroeconomic moves. And so with all that said, right now, you know, the S&P is paying what this year? 4.5%, 4.2% or 3%, maybe less than that now with these pullbacks. And so what that means is that the conventionally less risky assets are paying out more than the conventionally more risky assets, right? And that's a weird thing, as well as like the yield curve inversion, meaning short-term bonds are paying out more than long-term bonds, which is backwards, you know, because again, if you think about it, long-term should theoretically pay more because inflation is going to go up more over that period of time. Like over a 10-year period, you know, the dollar is going to devalue, obviously, right? And you know, when you take all of that stuff into consideration, it's just a weird time in markets right now for sure. I've been saying this for weeks now. It's a weird time. Yeah, O'Reilly posted numbers here. We'll put those numbers up on chat. O'Reilly posted 1072. They expected 1040 EPS, revenue of 4.2 billion. They expected 4.09 billion. They also raised their EPS for fiscal year 23 and their revenue guidance. Again, we're starting to rebound a little bit for Nvidia as well as Meta. Meta back up to 310s. We got 12 minutes until the actual earnings call starts. So stick around, but again, we'll see. Dollar index strength says we're not out of the danger zone. Yeah, I mean, the dollar's probably going to be moving up. I mean, it usually is going to move inversely to equities. And so if equities are moving down, again, equities are moving down mostly from Alphabet yesterday. But the dollar index is going to be pushing up based off of that. And that's okay. I mean, that's pretty standard. Hey, thanks, Ramsey, for the $5, brother. Thank you. Powell didn't really have any broadcasted speech. Hiren. He had some introductory remarks. Again, we'll post them. I think we posted them already. If you want to see them, scroll up. We have the link above it. And again, we're in the blackout period for the FOMC, which is a week, which is the previous Saturday plus a week. The Saturday before the FOMC meeting, which is this upcoming Saturday plus a week. And so we're in the blackout period now. And what that means is that Powell isn't actually allowed to speak on the economy or rate hike decisions right now. We're in that blackout period. I send you cash because you were one of the few who are not market insider. Yeah, I mean, again, I don't ever claim to be an expert. Like, again, if you haven't already subscribed, team, because we put out all this stuff for free every day. We don't claim to be good or experts, or we don't charge for content. It's all free. We have sponsors, of course, and I mean, don't get it twisted. Like, I'm here to make money. I mean, of course, I'm streaming for sometimes 6, 7, 8 hours a day. And so I'm not doing this out of the kindness of my heart. And we have sponsors, but I'd rather somebody that's honest about that to begin with. And so if you appreciate the honesty from somebody who doesn't claim to be an expert, doesn't give out stock picks, reports on all the major economic and stock, data for free, hit the subscribe button, hit the notification bell. I appreciate it. We cover all the big earnings reports. Tomorrow we have Amazon. We also have GDP data dropping tomorrow, which, macroeconomically will be a big influence over what we look like for the next month or two with GDP data. I think it's expected at 4.2%. And so it's expected at a pretty high number relative to what we've seen over the last year or so for GDP. So it's an interesting time right now. I think the market's also fearing inflation to a certain extent. And so in that regard, like it could be a weird market. Again, we got Amazon earnings next week. We got GDP tomorrow. We got PCE data, which is called the personal consumption expenditure. It's actually the Fed's preferred inflation metric over like CPI or PPI. PCE is the Fed's preferred inflation metric. And so it's what they use to gauge how bad inflation currently is. And so very important economic reports tomorrow and Friday, as well as Amazon earnings tomorrow, as well as oil earnings on Friday. So we got like Exxon, Chevron, I believe, are Friday. Let me see exactly which ones are Friday, but it's a big week. And then next week we got the FOMC meeting. So just a lot of stuff. So Friday we got Exxon, Chevron, Phillips, Colgate, AbbVie, and some other oil plays too. I'm going to switch my headphones out, team. Give me 1 second. And then Amazon tomorrow is going to be the next big boy earnings report. It's a big one. We'll see if it's good, but should be interesting for sure. All right, guys. So, yeah, we do have some big stuff dropping pretty soon. Let's go ahead and get ready to watch the Meta earnings plays. I don't know, Gabriel. I have no idea if Amazon's going to come in good or bad. Nobody does. Anybody that claims to is just kind of telling you what you want to hear. Nobody really knows if we're going to get good or bad stuff here. Probably BG, but I'm not 100% sure. Coinbase next week as well. Yeah, GDP drops at 8:30 tomorrow morning, team. So again, stick around. We'll be covering it. Flinching out mom's cash. Yeah. People said I lived in my mom's basement. All I'll say is that if I do, man, my mom's got a freaking nice basement, dude. Amazon should rise like Microsoft. I hope so. I mean, we don't know. It's good. It's a good gauge on spending as well, the Amazon earnings. And again, with GDP dropping tomorrow morning, it'll be fun. Sorry, I'm drinking coffee late in the afternoon. I probably shouldn't be, but I've been streaming for. At this point in time, I've been streaming for like 7 hours today. So, I mean, Casey, I actually heard Burry lost money. I heard that he was actually net long and that he used the short positions as a hedge, as well as when you take into account like time decay and a bunch of other stuff, those options are probably pretty restricted in terms of like favorability by holding an option that long. That's what I heard at least, although I'm not 100% sure. Hey, thank you, Saul. Yeah, we stream every major economic report. All right, hey, we got 6 minutes here, 6 minutes before the actual earnings call. Let's get ready. So there's no actual Powell speech today. I mean, he did a brief introductory remarks to one of the conferences, Nuno, but I don't think he has anything today. Hey, thank you, Larry. Alfredo, I don't know anything about futures. Where should I get started? I would try a funded account program like Top Step. Again, they're a sponsor of mine. I'm biased in their favor, so like understand like they pay me money to promote them. But they're incredibly useful for traders because it allows traders to get started with limited risk. Um, and if you lose, it's not the end of the world. So it's kind of like paper trading with a little bit more pressure. And if you're actually good enough at it, they'll fund you, right? And that makes perfect sense when you're learning to day trade futures, I think, because it lets you. Trading's about learning how to perform under pressure. A lot of people try to take like demo accounts and then switch over to real money trading the same size they did on the demo account. It doesn't really work because you have different pressure amounts with each account, right? So it doesn't really translate where these funded account programs in that regard are useful. But again, I'm biased because they're a sponsor of mine. So, but if you want to check it out, I'll post the link here. In economics, no, Andres. I got interested in the stock market like 8 years ago. And then I kind of learned about the stock market, in turn learned about, futures, learned about crypto, learned about options, learned about economics, Powell, the Federal Reserve, you know what I mean? Like you just kind of, once you start to, get down that rabbit hole of interest in monetary policy and the financial markets, you kind of, I have to learn a lot of it because, I run this YouTube channel. Hey, thank you, Casey. I appreciate the support, man. Thanks for becoming a member. I'm heavy on big cap tech stocks in the past few months, was just depressing. Yeah, for sure. DCA. I mean, I'm not going to say you should dollar cost average. If you got 25 years, brother, listen, the biggest long-term statistical edge in markets is buying blue chip or buying index funds or blue chip stocks and just sitting on them for 10 plus years. If you do that, you're almost guaranteed to make money. Of course, I can't guarantee you're going to make money, but again, the S&P 500 over a century of data gives you on average 10% a year. It's not every year, but it's on average 10%, which means in the good years, you're going to make way more than that. And sometimes you're going to lose money on each year. But over a period of years and years and years, the compounding effect of those gains is really profound. And it's the single biggest edge you'll ever have in markets. And so I'm not telling you to DCA, but if you got 25 years, this drop that we're experiencing today is very insignificant when you zoom out. Again, I can't guarantee you're going to make money. Nobody can, but understand like that's the biggest edge. Hey, thank you, Emmanuel. I appreciate it, man. Thanks so much. Do you think Meta will be volatile during the call? If they say something relevant, they probably will, but we'll see. I'm going to go ahead and mute the music here, guys, so I can listen to the call in the background and just be prepared to show you guys it. I'm also going to turn the music off now because I need to. All right, guys, good or bad call, let me know. Let me see what poll we did. Yeah, are they just going to spam AI? I would if I was them. I've always tried to understand the inverted yield. Your explanation a few minutes ago was the best. Thanks very much. Yeah, all good, Fidelis. Yeah, man. I mean, it just takes time. It just takes time of like understanding, short-term yields pay less because they're shorter term, right? Long-term yields pay more because they're longer term. And so when shorter term yields pay more than longer term yields, it's kind of backwards relative to what it should be, if that makes sense, right? That's the inversion you hear about. Uh, it can signal a lot of different things. Some of the worst being a crash or recession. Hey, Meta's starting to bounce up, guys. All right, so the earnings call should start anytime now. We'll see. So you pretty much say nothing. Yeah, man, I'm one of the top 3 nothing sayers in the world right now for sure. Definitely top 3. You know, I say nothing better than the best. You know what I mean? And so, I try to stay as humble as I can being that, but all right, guys. Hey, we're waiting here for the earnings call to start. We'll see what happens. Waiting for the earnings call to start. You can see the numbers and what we actually reported on. Tesla actually breaking lows down under 212s right now. Just broke the lows of pre-market. If we zoom in here, here's Tesla. All right, here we go. Sound check.
Good afternoon. My name is Dave, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta third quarter earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press 1, then the number 4 on your telephone keypad. This call will be recorded. Thank you very much. Ken Durrell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon, and welcome to Meta Platforms' third quarter 2023 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
All right. Thanks, Ken. Thanks, everyone, for joining today. This was a good quarter for our community and our business. We estimate that there are now more than 3.9 billion people who use at least one of our apps every month. The big product news this quarter is that we just held our annual Connect conference, and we discussed Quest 3, which is the first mainstream mixed reality device, and the next generation of Ray-Ban Meta smart glasses, which are the first smart glasses with our Meta AI built in. There continues to be a ton of innovation in AI, and we used Connect to describe and start launching a lot of the new consumer AI experiences that we expect to become meaningful parts of all of our apps and our business over the coming years. We started rolling out Meta AI, our new assistant that you can access across all our messaging experiences and smart glasses to answer questions, get access to real-time information, and generate photorealistic images. We started launching our AI Studio platform that enables people to create and interact with lots of different AIs for help getting things done and just having fun. We rolled out Emu, our image creation model that produces high-quality images and stickers fast. We launched an early alpha of business AIs so that eventually every business can have an AI to interface with customers to do sales and support. And we laid out the plan to launch creator AIs next year, so every creator can have an AI that their fans can engage with to help them build out their community. And that's just a snapshot of some of the AI work that we're doing. The experiences that we started rolling out at Connect are going to transform the way that people use all our services: feeds, messaging, hardware, advertising, business messaging, interacting with creators, and more. But it's going to take time to tune all of these experiences before hundreds of millions or billions of people are going to use them. And I expect that dialing in these products and the vision that we articulated at Connect is going to be our theme for much of the next year. And I think that it's going to be a very exciting 2024. As we are looking ahead and planning for next year, I wanted to share a few thoughts on what I'm expecting. I've been happy with our results this year so far, and we are planning to continue focusing on operating efficiently going forward, both because it creates a more disciplined and lean culture, and also because it provides stability to see our long term initiatives through in a very volatile world. Now, in terms of investment priorities, AI will be our biggest investment area in 2024, both in engineering and compute resources. But I want to avoid allocating a lot of new headcount. So we're going to continue deprioritizing a number of non-AI projects across the company to shift people towards working on AI instead. On the recruiting front, one dynamic that I want to flag is that we have a sizable hiring backlog right now, since part of our layoffs earlier this year included teams swapping out certain skill sets for being able to hire others. And we're still going to be hiring those roles into 2024. So that means that even though we're planning to grow headcount at a much slower rate going forward, the actual rate next year may temporarily be faster as we work through this hiring backlog. All right, now let's get into our product updates. Let's start with Reels, which continues to do very well. We estimate that with all the ranking and product improvements that we've made, Reels has now driven more than 40% increase in time spent on Instagram since launch. We also reached a monetization milestone earlier than expected, and we estimate that Reels is now net neutral to overall company ad revenue. In many ways, Reels has now graduated from being an early initiative to now being a core part of our apps. So going forward, we're going to continue focusing on Reels, but we'll also look at growing it as part of our overall portfolio of video services, which make up more than half of the time that is spent on Facebook and Instagram. And there's a lot more to do across all of these. All right, AI. AI advances are driving a lot of our product and business performance. Generative AI will increasingly be important going forward. I outlined our product roadmap earlier. And on top of that, we're also building foundation models like Llama 2, which we believe is now the leading open source model with more than 30 million Llama downloads last month. Beyond that, there was also a different set of sophisticated recommendation AI systems that powers our feeds, Reels, ads, and integrity systems. And this technology has less hype right now than generative AI, but it is also very important and improving very quickly. AI-driven feed recommendations continue to grow their impact on incremental engagement. This year alone, we've seen a 7% increase in time spent on Facebook and a 6% increase on Instagram as a result of recommendation improvements. Our AI tools for advertisers are also driving results, with Advantage Plus shopping campaigns reaching a $10 billion run rate, and more than half of our advertisers using our Advantage Plus creative tools to optimize images and text in their ads creative. Business messaging also continues to grow across our services, and I believe will be the next major pillar of our business. There are more than 600 million conversations between people and businesses every day on our platforms. To give you a sense of what this could look like when it's scaled globally, every week now, more than 60% of people on WhatsApp in India message a business app account. Revenue from click-to-message ads in India has doubled year over year. Now, I think that this is going to be a really big opportunity for our new business AIs that I talked about earlier, that we hope will enable any business to easily set up an AI that people can message to help with commerce and support. Today, most commerce and messaging is in countries where the cost of labor is low enough that it makes sense for businesses to have people corresponding with customers over text. And in those countries like Thailand or Vietnam, there's a huge amount of commerce that happens in this way. But in lots of parts of the world, the cost of labor is too expensive for this to be viable. But with business AIs, we have the opportunity to bring down that cost and expand commerce and messaging into larger economies across the world. So making business AIs work for more businesses is going to be an important focus for us into 2024. I want to give a quick update on Threads. We're 3 months in now, and I'm very happy with the trajectory. There are just under 100 million monthly actives at this point, and we're now getting to the point where we're going to be focusing on growing the community further. From what we can tell, people love it so far. I've thought for a long time that there should be a billion-person public conversations app that is a bit more positive. And I think that if we keep at this for a few more years, then I think we have a good chance of achieving our vision there. All right, now finally, in addition to AI, our other major long-term focus is the metaverse. And we just launched Quest 3, our most powerful headset yet, at a very competitive price. We packed a lot of improvements in there, including a next-generation chipset with 2x the graphics performance, our best displays yet, and a form factor that's 40% thinner than Quest 2. But the most important breakthrough for Quest 3 is that it's the first mainstream mixed reality device. And that means that when you put on the device, you see your physical room around you, and you can bring digital objects and games into your physical space, whether that's a ping pong table, your workstation, a big screen TV to play Xbox games on, or your friends as holograms. The early reviews have been great, and it's been fun to see how people respond to this. We also launched the next generation of Ray-Ban Meta smart glasses. They're upgraded from the first generation in basically every way: better camera, clearer audio, they're lighter, they have more styles, and you can now even live stream video from them. But most importantly, these are the first smart glasses shipping with Meta AI built in. So you can ask your glasses questions throughout the day, and it'll answer them right in your ear. And in many ways, glasses are the ideal form factor for an AI device because they enable your AI assistant to see what you see and hear what you hear. Again, it's good to see the early reviews are so positive, and I'm looking forward to this space evolving quickly over the coming years. We are also making progress on software for the metaverse too. Horizon is now growing faster as more new worlds like Super Rumble and Citadel come online. We also started testing Horizon for phones, tablets, and PCs, which is going to be an important part of how we build out the metaverse across devices. And we've had a couple of important milestones with avatars as well, both for our expressive avatars and the latest codec avatars that I showed off recently. Now, as I said at Connect, I think one of the most interesting questions for our industry over the coming decades is going to be how we bring together our physical and digital worlds into a coherent and good experience. I think we're starting to see some of the building blocks come together between mixed reality for bringing digital objects into the physical world, our AI studio work for enabling interactions with all kinds of different AIs, and eventually smart glasses to bring all of this together into a stylish form factor. So I'm very excited about the roadmap ahead. All right, that is my update for today. This was a good quarter. I'm pleased with our progress on efficiency this year. We're a leaner organization, shipping faster and advancing the state of the art in all of our long-term initiatives. And while investing heavily for the future, we also just recorded our highest operating margin in 2 years. So I'm looking forward to carrying this product momentum and operating discipline forward. As always, thank you to everyone on our team and all of you who are on this journey with us. And now here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis, unless otherwise noted. Q3 total revenue was $34.1 billion, up 23% or 21% on a constant currency basis. Q3 total expenses were $20.4 billion, down 7% compared to last year. In terms of the specific line items, cost of revenue increased 9% as higher infrastructure-related costs were partially offset by lower content costs. R&D increased 1% as higher headcount-related costs from Family of Apps and Reality Labs were partially offset by lower non-headcount-related Reality Labs operating expenses. Marketing and sales decreased 24%, due primarily to lower marketing spend and headcount-related costs. G&A decreased 39%, due primarily to lower legal-related expenses. We ended the quarter with over 66,100 employees, down 7% from the second quarter. our third quarter headcount no longer included the substantial majority of the employees impacted by the previously announced layoffs. Third quarter operating income was $13.7 billion, representing a 40% operating margin. Our tax rate for the quarter was 17%. Net income was $11.6 billion, or $4.39 per share. Capital expenditures, including principal payments on finance leases, were $6.8 billion, driven by investments in servers, data centers, and network infrastructure. Capital expenditures were below the prior year levels, primarily due to lower server and data center construction spend as we prepared to shift to our new data center design, as well as payment timing. Free cash flow was $13.6 billion, benefiting from a deferral of income taxes, which was paid in the fourth quarter. We repurchased $3.7 billion of our Class A common stock in the third quarter and ended the quarter with $61.1 billion in cash and marketable securities and $18.4 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow. We estimate that approximately 3.14 billion people used at least one of our Family of Apps on a daily basis in September, and that approximately 3.96 billion people used at least one on a monthly basis. Facebook continues to grow globally and engagement remains strong. Facebook daily active users were 2.09 billion, up 5% or 101 million compared to last year. DAUs represented approximately 68% of the 3.05 billion monthly active users in September. MAUs grew by 91 million or 3% compared to last year. Q3 total Family of Apps revenue was $33.9 billion, up 24% year over year. Q3 Family of Apps ad revenue was $33.6 billion, up 24% or 21% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth, followed by CPG and gaming. Online commerce and gaming benefited from strong spend among advertisers in China reaching customers in other markets. On a user geography basis, ad revenue growth was strongest in Rest of World and Europe at 36% and 35%, respectively, followed by Asia Pacific at 19% and North America at 17%. Foreign currency was a tailwind to advertising revenue growth in all international regions. In Q3, the total number of ad impressions served across our services increased 31%, and the average price per ad decreased 6%. Impression growth was mainly driven by Asia Pacific and Rest of World. The year-over-year decline in pricing was driven by strong impression growth, especially from lower monetizing surfaces and regions. While overall pricing remains under pressure from these factors, we believe our ongoing improvements to ad targeting and measurement are continuing to drive improved results for advertisers. Family of Apps other revenue was $293 million in Q3, up 53%, driven by strong business messaging revenue growth from our WhatsApp business platform. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q3, Family of Apps expenses were $16.4 billion, representing approximately 81% of our overall expenses. FOA expenses were down 9% as growth in infrastructure-related costs was more than offset by lower legal-related expenses, marketing, and headcount-related costs. Family of Apps operating income was $17.5 billion, representing a 52% operating margin. Within our Reality Labs segment, Q3 revenue was $210 million, down 26%, due primarily to lower Quest 2 sales. Reality Labs expenses were $4 billion, flat year over year, as higher headcount-related expenses were offset by lower non-headcount related operating expenses. Reality Labs' operating loss was $3.7 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, overall engagement on Facebook and Instagram remains strong. Reels and video content more broadly continues to grow and drive incremental engagement. AI recommended content from unconnected accounts and feed continues to become increasingly incremental to engagement, including in the US and Canada. These gains are being driven by improvements to our recommendation systems, and we see additional opportunities to advance our systems even further in the future as we deploy more advanced models. We're also developing entirely new experiences for our community. Our investments in AI capacity in recent years have enabled us to support leading generative AI research, and we're meaningfully accelerating the pace of bringing that research into our products. We launched our first consumer Gen AI experiences last month that are built on top of our foundation models and are excited to learn from how people use these tools to make them increasingly valuable over time. Aside from generative AI, Threads also remains a compelling long-term opportunity, and we're excited to build on the strong product momentum we have going into next year. Turning to the second driver, improving monetization. Here, our focus is on continuing to drive marketing performance for businesses, including through business messaging. There are 4 areas of this work: improving Reels monetization, creating engaging on-platform ad experiences, making it easier for advertisers to connect their marketing data, and increasingly leveraging AI across our ad systems and products. On Reels, we have continued to improve monetization and are now at a level where Reels is neutral to overall revenue. We've made tremendous progress over the last year building and scaling Reels as a consumer product, and it has now become part of the core experience on Instagram and Facebook. As such, we don't anticipate quantifying the net revenue contribution from Reels going forward. We will still work to further improve Reels ads performance through ranking improvements and making Reels ads increasingly interactive, while also growing supply to give businesses more opportunities to get in front of people. We anticipate this ongoing work will help Reels be a modest tailwind to revenue in 2024, while we continue to strike the right balance between engagement and revenue growth. But our focus going forward will be on growing revenue and engagement on overall video and more holistically across our product lines within Instagram and Facebook. Next, on-site experiences. We're seeing sustained momentum with click-to-message ads. Click-to-WhatsApp ad revenue continues to grow very quickly in particular and is already at a multi-billion-dollar annual run rate. We're progressing on our work to enable further down the funnel conversions, and longer term, we're excited about the potential of AI to help businesses message with customers more efficiently at scale. We've recently started testing AI capabilities with a few partners, and we'll take our time to get the experience right, but we believe this will be a big unlock for business messaging in the future. We're also excited about the potential for paid messaging, which serves as a nice complement to click-to-messaging ads by helping businesses develop ongoing relationships with customers once they're in a messaging thread. Outside of business messaging, we're seeing good early traction with Shops ads. And in the third quarter, we announced expanded commerce integrations with third-party services to make it easier for businesses to set up a Facebook or Instagram shop and run Shops ads. The third piece of our work is making it easier for advertisers to connect their marketing data. We're investing in ways to make it easier for advertisers to adopt our Conversions API, understand its impact, and use it across a broader set of objectives. In addition to our existing support for AWS, in September, we announced the support of Google Cloud for the Conversions API gateway. We've also introduced enhanced reporting and rolled out Conversions API for business messaging, so click-to-message advertisers can now better understand the value of WhatsApp and Messenger and improve their performance. Last, AI. We are leveraging AI across our ad systems and suite of products, which is driving improved performance for advertisers. We're increasingly adopting the use of larger, more advanced ads models and using AI to power ads products that provide increased automation to advertisers. We're seeing strong traction with our Advantage Plus shopping solution, particularly around online commerce and CPG advertisers looking to drive online sales. And we're continuing to invest in several other products within our Meta Advantage Plus suite to help advertisers optimize and automate more of their campaigns. Before turning to our revenue outlook, I'd like to provide color on our hiring plans as we look to 2024. One important point to note is that we are currently operating with a significant underrun against our 2023 budgeted headcount. For much of late 2022 and early 2023, we had instituted a broad-based hiring freeze as we undertook our restructuring efforts. In addition, as part of those restructuring efforts, many teams elected to make deeper headcount reductions in order to hire different skill sets that they need. We have since resumed hiring, but expect that much of our hiring that was originally planned for and budgeted in 2023 will occur in 2024. As part of our 2024 budget, we plan to selectively allocate incremental headcount toward 4 key company priorities: AI, infrastructure, Reality Labs, and monetization, as well as toward our regulatory and compliance needs. Of those areas, we expect AI to be the largest area of increased investment as we further invest in generative AI across our core products, internal tooling, and research efforts. We aim to offset some of this growth by continuing our efficiency focus and reducing planned hiring in other areas across the company in 2024. The net effect of our efforts to close out our 2023 hiring underruns and our efficiency-focused 2024 budgeting process is that we expect to end next year with reported in-seat headcount meaningfully higher than our current headcount, but to grow at a slower rate beyond that. We also expect a step up in infrastructure-related expense growth next year as we recognize higher depreciation and operating costs from running an expanded infrastructure footprint. In addition, we continue to monitor the active regulatory landscape, including the increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. Of note, the FTC is seeking to substantially modify our existing consent order and impose additional restrictions on our ability to operate. We are contesting this matter, but if we are unsuccessful, it would have an adverse impact on our business. Turning now to the revenue outlook. We expect fourth quarter 2023 total revenue to be in the range of $36.5 to $40 billion. Our guidance assumes a foreign currency tailwind of approximately 2% to year-over-year total revenue growth in the fourth quarter based on current exchange rates. Turning now to the expense outlook. We anticipate that our full year 2023 total expenses will be in the range of $87 to $89 billion, lowered from our prior range of $88 to $91 billion. This outlook includes approximately $3.5 billion of restructuring costs related to facilities consolidation charges and severance and other personnel costs. We expect Reality Labs operating losses to increase year-over-year in 2023. We are also sharing a preliminary outlook for 2024 expenses, CapEx, and our tax rate. We expect full year 2024 total expenses to be in the range of $94 to $99 billion. We continue to expect a few factors to be drivers of total expense growth in 2024. First, we expect higher infrastructure-related costs next year. Given our increased capital investments in recent years, we expect depreciation expenses in 2024 to increase by a larger amount than in 2023. We also expect to incur higher operating costs from running a larger infrastructure footprint. Second, we anticipate growth in payroll expenses as we work down our current hiring underrun and add incremental talent to support priority areas in 2024, which we expect will continue to shift our workforce composition toward higher cost technical roles. Finally, for Reality Labs, we expect operating losses to increase meaningfully year over year due to our ongoing product development efforts in AR/VR and our investments to further scale our ecosystem. Turning now to the CapEx outlook. We expect 2023 capital expenditures to be in the range of $27 to $29 billion, updated from our prior estimate of $27 to $30 billion. We anticipate our full year 2024 capital expenditures will be in the range of $30 to $35 billion, with growth driven by investments in servers, including both non-AI and AI hardware, and in data centers as we ramp up construction on sites with the new data center architecture we announced late last year. On to tax. Absent any changes to U.S. tax law, we expect our fourth quarter 2023 and full year 2024 tax rates to be similar to the third quarter of 2023. Please note that our outlook for 2024 expenses, capital expenditures, and tax rate are preliminary estimates. In the future, we expect to provide our initial forward year expense, CapEx, and tax rate outlooks on the fourth quarter call. In closing, this was a good quarter for our business as our efficiency efforts are translating into improved financial results, and we're seeing momentum across our company priorities. We are excited to build on this work in 2024 as we invest in areas that have the potential to meaningfully transform how people engage with our services and with each other in the years ahead. With that, Dave, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch-tone phone. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. Your first question comes from the line of Brian Nowak with Morgan Stanley.
Great. Thanks for taking my questions. I have two. The first one, Mark, just wanted to ask you about the open source model strategy. You've been a leader in developing a lot of unique open source AI models. You've got some high profile distribution partners now. How do you think about the strategic opportunity for Meta from the growing open source model adoption? Then the second one, Susan, just on the operating losses at Reality Labs, I understand there's product development and efforts to scale the ecosystem. Can you help us understand or give us examples of expenditure going on within Reality Labs that could also be ported and used over a family of apps, perhaps over time?
Sure. Okay, I can start with the AI models. We have a pretty long history of open sourcing parts of our infrastructure that are not kind of the direct product code. And a lot of the reason why we do this is because it increases adoption and creates a standard around the industry, which often drives forward innovation faster. So we benefit and our products benefit, as well as there's more scrutiny on kind of security and safety related things. So we think that there's a benefit there. And sometimes more companies running models or infrastructure can make it run more efficiently, which helps reduce our costs as well, which is something that we've seen with open compute. So I think that there's a good chance that happens here over time. And obviously our CapEx expenses are a big driver of our costs. So, any aid in innovating on efficiency is sort of a big thing there. The other piece is just that over time with our AI efforts, we've tried to distinguish ourselves as being a place that does work that will be shared with the industry, and that attracts a lot of the best people to come work here. So, a lot of people want to go to the place to work where their work is going to touch most people. One way to do that is by building products that billions of people use. But if you're really focused engineer or researcher in this area, you also want to build the thing that's going to be the standard for the industry. So I think that's pretty exciting, and it helps us do leading work. While at the same time, a lot of the secret sauce that goes into our product is specific product logic on top of the model, and we're also able to further train the models with data that we have internally. So I think it's a good balance of improving the quality of what we do and improving the economics around it and improving recruiting while still enabling us to build a leading product.
And Brian, I'll go ahead and take your second question, which is on the operating losses at Reality Labs and whether there's any benefit to Family of Apps from some of that work. So first, I should clarify, the majority of our Reality Labs costs are direct costs in headcount, operating expenses, and product COGS for the Reality Labs work. The remainder of the Reality Labs total costs are indirect costs, such as facilities that get allocated based on our estimate of their benefit to Reality Labs. Now, as you alluded to, Reality Labs is working to build the future of online interactions, and we do expect you'll see some interesting ways that translate into work with the Family of Apps in the nearer term. For example, with avatars, you've already seen 1 billion avatars created so far. We expect that this will become increasingly important across the Family of Apps. And we're also starting to see how our hardware can help create unique content for Facebook and Instagram today, with our Ray-Ban Meta smart glasses, making it easier to capture and share to Family of Apps, including live streaming. And, we think that will obviously create more engaging content for the content ecosystem. Longer term, obviously, we think there's a lot of value from operating our Family of Apps experiences on top of a new computing platform that we help develop. For example, having glasses on that enable you to have our Meta AI assistant with you at all times. And as glasses scale, they'll make it increasingly easy to capture compelling content from a first-person point of view while you're, staying in the moment or the activity that you're doing. And sharing that content should enrich our content ecosystems even further. But again, the operating losses, that are occurring within the Reality Labs segment are really driven by the Reality Labs work directly. And, we think that over the sort of arc of the years ahead, there will be increasing shared benefits to our Family of Apps experiences.
Your next question comes from the line of Eric Sheridan with Goldman Sachs.
Thanks for taking the questions. Maybe on the business, I have two. One, when you see maybe a wider divergence than we thought in terms of some of the regional performance of the advertising businesses, anything to call out region by region in terms of either macroeconomic conditions or levels of product initiatives having been rolled out in different parts of the world that might lead to a wider divergence in operating performance in the ad business across the globe would be number one. And then two, Susan, you introduced this concept a couple of quarters ago about data center architecture, and you said it's now being deployed in the way you're allocating capital into the business. Is there any update on how we should be thinking about that on a multi-year view in terms of achieving additional capital efficiencies and be able to deploy less CapEx, but maybe with a higher throughput or output on those dollars spent? Thank you.
Thanks, Eric. So your first question, I think, was about regional trends or regional themes in our ad revenue, which, as you saw this quarter, accelerated across all regions. To give you a little bit of color, in North America, we saw accelerate by 7 points, due primarily to strong demand from China advertisers. Note that North America didn't experience the same currency tailwinds that drove acceleration in year-over-year growth for the other regions. In the EU, or in our EU region, we saw that accelerate 21 points. There was a broad-based acceleration in the region, including demand from China advertisers and some benefit from currency tailwinds after facing currency headwinds in Q2. Asia Pacific accelerated 9 points. We benefited from stronger demand in Southeast Asian countries, and again, the flip to currency tailwinds versus headwinds in Q2. Rest of world accelerated 20 points. We saw both stronger pricing and the same currency dynamic there. Brazil was a strong contributor to the region's acceleration, due in part to increased advertisers' demand from China advertisers targeting users in Brazil. Your second question was around the impact of the new data center architecture on our CapEx investments in the years to come. We are still relatively early on this. We had to pause some of our existing data center construction work and, to switch over to the new data center architecture that played through in some of our 2023 CapEx dynamics. And going forward, as I think we said when we introduced the concept of this architecture, we expect it to be more cost efficient for us. We expect it will give us greater fungibility in the way that we plan for CPU and GPU capacity. So we expect that we'll be realizing the cost benefits and efficiencies and the planning flexibility that the architecture gives us in the years to come.
And your next question comes from the line of Mark Shmulik with Bernstein.
Yes, hi. Thanks for taking the questions. The first is, this month you started to roll out some of those first kind of Gen AI tools for ad creative. And we'll have to hear a little bit about kind of how that's going. Are advertisers using this, and really is it creating better ads on their behalf? And then secondly, as we kind of look ahead here to the fourth quarter, there's certainly been a lot of unfortunate geopolitical kind of activity around the globe. We'd love to just understand some color around how that affects kind of Meta's ad business. Thank you.
Hi, thanks, Mark. I can take both of those. So your first question was around Gen AI tools, especially for advertisers. And you'll see that we have been increasingly testing these in our AI sandbox. And then as they become more mature, we incorporate them into our ads manager directly. We've incorporated them into some of our Advantage Plus solutions. A few that I would highlight that we're rolling out this quarter are text variations, so generating multiple versions of ad text based on an advertiser's original copy that helps highlight the selling points of their products and services, giving them multiple text options to better reach their audience. Another one is image expansion, which helps adjust creative assets to fit different aspect ratios across multiple services like feed or reels. That allows advertisers to spend less time themselves trying to repurpose their creative assets in these different formats. Another one is background generation, creating multiple backgrounds to complement the advertiser's product images, allowing advertisers to tailor their creative assets for different audiences. And we're making this available actually through Advantage Plus catalog ads. And so we really feel like we've introduced quite a lot of new ads products and features. You asked about the Gen AI ones specifically, so those are the ones I highlighted. We've actually introduced a number of others that are related to other dimensions of the ad creation experience that we expect will help, improve our advertising performance, will help advertisers drive sales, especially over the holidays and especially in the Advantage Plus shopping suite. So we're very excited about all of those upcoming launches, and we think that the early advertiser feedback has been very positive. Your second question was on looking ahead in Q4 and the impact of some of the geopolitical activity that we've seen around the world and how that might be affecting our business. So first, I think I should start by saying that, our thoughts are with everyone who has been impacted by the horrific violence in the Middle East. And we know that our services can be a vital tool for information and connection and expression at a moment like this. And we're continuing to monitor the situation and are doing everything we can to keep people safe and to keep our services secure. Now, in terms of how this translates into impact on the Q4 business, first of all, I should say that coming into Q4, we've been seeing continued strong advertiser demand in key segments, including online commerce and gaming. But having said that, we are also seeing more volatility at the start of the quarter. That's in part why we widened our guidance range to capture that uncertainty. And so, for instance, while we don't have material direct revenue exposure to Israel and the Middle East, we have observed softer ad spend in the beginning of the fourth quarter, correlating with the start of the conflict, which is captured in our Q4 revenue outlook. It's hard for us to attribute demand softness directly to any specific geopolitical event. Historically, we have seen broader demand softness follow other regional conflicts in the past, such as in the Ukraine war. So this is something that we're continuing to monitor. We've reflected the latest trends and advertiser reaction that we've seen into our Q4 outlook, which again, we think reflects the greater uncertainty and volatility in the landscape ahead. I want to add here too that we are pleased with the fundamentals of the business and with our execution. We've seen promising engagement trends. We're continuing to drive ad performance improvements. We're executing well on our company priorities. So we'll continue to stay focused in those areas, and we'll also remain disciplined with our investment approach as we navigate a volatile environment.
Your next question comes from line of Doug Anmuth with JP Morgan.
Thanks for taking the questions. One for Mark and one for Susan. Mark, I was hoping you could talk more about the Gen AI-driven vertical chatbots and Meta AI Assistant rolled out at Connect a few weeks ago. How do you think about the potential for these products to improve both engagement and monetization over time? And then Susan, I know it's early, but was hoping you could talk a little bit qualitatively about some of the puts and takes to 2024 revenue growth. And then in particular, whether you'd expect revenue to grow faster than expenses off a normalized revenue base backing out restructuring. Thanks.
Sure, I can talk about some of the AI launches first. We launched Meta AI, which is sort of an AI assistant that you can ask different questions and get access to real-time information as well as generating images. And we also launched the first version of AI Studio with several initial AI characters that you can interact with. And part of the idea here is that we think that having a basic assistant is really important, but we think that people are that there are going to be lots of different AIs that people interact with. We think ultimately, most creators are going to want one to help grow and engage their community. We think most businesses are going to want one to help support their customers and help drive commerce. So we think that there are going to be a lot of different AIs. In terms of engagement, the first order effect is, I think is at scale. I think that this is going to be one of the ways that people use our messaging apps and communicate with. You're going to talk to people and you'll talk to AIs. What the mix of that is, I think will kind of shift over time, and I don't think anyone can really predict that. But this is a new use case that doesn't take away from people interacting with people. If anything, it should. We're designing these to make it so that they can help facilitate and encourage interactions between people and make things more fun by making it so you can drop in some of these AIs into group chats and things like that, just to make the experiences more engaging. So this should be incremental and create additional engagement. The AIs also have profiles in Instagram and Facebook and can produce content. And over time, we're going to be able to interact with each other. And I think that's going to be an interesting dynamic and an interesting, almost a new kind of medium and art form. So I think that'll be an interesting vector for increasing engagement and entertainment as well. So I'm excited about that. Of course, whenever there's more engagement in the apps, that creates the opportunity for more monetization. So there's that. On the monetization side, and then the other big opportunity on monetization, which I talked about up front, is just business messaging. One of the big things that I think is a key unlock for making the business messaging, for making that business model work around the globe, is effectively making it so that businesses in countries where there's a higher cost of labor can have an AI that can respond to messages from people, so that way it's not cost prohibitive for them to engage in that. In that type of interaction with customers. So I think that if we can, as we are able to roll out the business AIs, I think that can really unlock and grow the business messaging business in a big way. But we have a lot of work to do to get there. So that's kind of a basic view on how I think this will affect the engagement in business.
I'm happy to take the second question. Thanks, Doug. We obviously have not shared a 2024 revenue outlook yet. You asked about what are some of the significant puts and takes, and I'd maybe point back to what I said earlier about the Q4 outlook, just to highlight what a volatile macro environment we believe we're in. I think that will obviously have a big impact on the advertising market next year, and it's something we'll be keeping a very close eye on. But ultimately, we're very subject to volatility in the macro landscape. Certainly, our own ads performance is an area where we have invested a lot, and we've seen a lot of increased value that we've been driving for marketers. We've been increasing the conversions we deliver, higher and offering higher return on their ad spend. So, we think that'll be an important factor. We're continuing to unroll a lot of new features, both Gen AI and not in our ads tool, and we're continuing to improve the ranking and delivery models that underlie our ads infrastructure. We'll also be obviously lapping stronger periods, especially in, as you saw with this quarter's results. So all of those factors, I think, will play into the 2024 revenue outlook. You also asked about the kind of the expense philosophy next year, whether expense growth will be tied to revenue growth. Obviously the revenue outlook is uncertain. We talked a little bit about what's going into the preliminary expense guide for 2024. The big components there are around infrastructure expenses. We do expect, given the increased capital investments that we have made in recent years, that depreciation expenses in 2024 will increase by a larger amount than in 2023. And we expect to incur higher operating costs from running a larger infrastructure footprint. The second big driver is on payroll. We anticipate payroll growth driven by the spillover of hiring that we had intended for 2023 into 2024. And we do expect that Family of Apps will be a larger source of payroll expense growth than Reality Labs in 2024. Additionally, hiring will generally be concentrated in technical roles, which will continue to shift our workforce composition towards a higher cost basis. And of course, the final piece being Reality Labs operating losses, which we expect to increase in 2024 across both the expense growth from higher payroll costs as well as higher non-headcount costs to support the development of our next-gen VR and AR products. How the expense and revenue outlook, come together, obviously, that's as we get more information on the revenue outlook for next year, that will influence that. Ultimately, we have talked about the framework that we, introduced in the past. We recognize that we have very ambitious investments on the horizon, including over a long time horizon with our Reality Labs work, and newer, equally ambitious investments we've added in the Gen AI roadmap more recently. And we recognize that we have to earn the ability to invest in all of those things by delivering consolidated operating income growth over time. So that's something we're very much focused on.
Your next question comes from the line of Justin Post with Bank of America Merrill Lynch.
Great, thank you. I guess I'll ask about the DSA and DMA, and also press reports that there could be a subscription offering in Europe. Maybe Mark, how do you think about subscription usage for Facebook? Maybe an update on how Meta Verified is going, and how you're thinking about the evolution of the model in Europe. Maybe we'll start with that, and then for Susan, I know you've talked a lot about Chinese advertisers. How do you think that could affect the growth as you comp that next year? Thanks a lot.
Hi, Justin. Thank you for the question. I think there are multiple parts there, and I will do my best to address all of them, but of course, let me know if I miss anything. So the first question was sort of around operating in Europe, in particular the legal basis for ads. So as we announced in August, we intend to evolve our legal basis for processing personal data for ads to a consent model in the EU, the EEA, and Switzerland, given the recent regulatory developments in those regions. We don't have any further details to share on the exact implementation at this time. We're continuing to engage with the DPC and other regulatory authorities on our proposed consent model, but we're committed to making this move as soon as possible, and we will provide an update when we have it. The second question you asked was about Meta Verified. So, we're still, I think, quite early here, but we've rolled out Meta Verified for creators to most markets globally. We continue to hear positive feedback from creators as we've helped them more easily establish their presence on Facebook and Instagram. We also have recently begun testing Meta Verified for businesses on Facebook and Instagram in select countries, and we have plans to expand that to businesses on WhatsApp in the future. And this will allow businesses to more easily stand out on our apps and build confidence with their customers and let their customers know that they're chatting with the right business. So we're encouraged by the early signs that we're seeing there, but again, very early and not a lot more to share right now. The third part of your question was around Chinese advertisers. So spend from Chinese advertisers further accelerated for us in Q3. We have benefited from strong investments from, a few of our larger clients. We've also seen generally broader base strength from other China advertisers, and we believe factors such as lower shipping costs and easing regulations on the gaming industry have served as tailwinds here. But, I think there has been a broader story of improved growth across all advertiser regions in Q3, and even excluding China advertisers, revenue growth has accelerated nicely. And you kind of alluded to whether, there's the sustainability of the China advertising revenue. And even though we've seen particularly strong growth this year, I would say that there has been a longer term trend of overall growth with this segment, dating back to, past years, and also periods of volatility in the past. Like in the last 2 years, we've seen periods with higher shipping costs, with lockdowns, with regulation weighing on demand. So we recognize there's the potential for volatility in the future as well, and especially given that there are so many macro factors at play that, are quite hard to predict.
Your next question comes from a line of Youssef Squali with Truist.
Thank you very much. Two quick questions for me. First, can you share any early read into demand for the Quest 3? It's been out for 10 days, but I think you've been taking orders from the last 3 weeks. And is it priced to be at least gross profit break even or not necessarily? And then second, Susan, for 2024, as we think about growth, can you speak maybe about political spend contribution that you've had back in 2020 and how that may inform how we should think about its contribution for 2024? Thank you.
Sure. So the first part of your question was early sort of signals with Quest 3. We are not sharing any explicit expectations for Quest 3, either, Q4 Reality Labs revenue, unit sales, et cetera. But we are very excited to have Quest 3 in market, in particular during the holiday shopping period. We think early reviews have been great, and we're very excited to have a product out there that are going to introduce a lot of people to mixed reality experiences for the first time. So it's very early. I think we don't have very many more specifics, but again, we're quite excited to have it in the market and to have it in particular during the holiday marketing season. Your second question was about political spend. And so this is a place where, I would say we saw acceleration and positive year-over-year growth in all verticals this quarter, really except politics, which is lapping the lead up to the 2022 U.S. midterms last year. So I will say, though, that this is also just a very small vertical for us, so there's not too much more to add there.
Dave, we have time for one last question.
Certainly, thank you. That will come from the line of Ross Sandler with Barclays.
Great. Hey, Mark, just going back to the AI agent theme. I know it's early, but how would you rank the overall strategy here around these AI agents and AI Studio compared to other big initiatives that Meta has made in FOA over the years? Is this bigger than or as big as, the Stories transition or the Reels transition? And any thoughts just kind of high level on that? And then the cost of serving up responses, especially stickers and images, is a little bit more expensive than your core business of, aggregating the news feed. So, how much more expensive, I guess, is the question. And are there things you can do to bring that cost down? Thanks a lot.
Yeah, sure. In terms of how big this is going to be, it's hard to predict. Because I don't think that anyone has built what we're building here. There are some analogies like, what OpenAI is doing with ChatGPT, but that's pretty different from what we're trying to do. Maybe the meta AI part of what we're doing overlaps with the type of work that they're doing, but the AI characters piece, I mean, there's a consumer part of that, there's a business part, there's a creators part. I'm just not sure that anyone else is doing this. And when we're working on things like stories and reels, there were some market precedents before that. Here, there's technology, which is extremely exciting. But I think part of what leading in an area and developing a new thing means is that you don't quite know how big it's going to be. But what I'd predict is that I do think that the fundamental technology around generative AI is going to transform meaningfully how people use each of the different apps that we build. I think for the feed apps, I think that over time more of the content that people consume is going to be either generated or edited by AI. Some of it will be creators will now have all these tools to make content more easily and more fun. And I think over time maybe we'll even get to the point where we can just generate content directly for people based on what they might be interested in. I think that could be really compelling. On the messaging side, I think that the way that we're looking at these AIs kind of ties into that directly, where you'll be able to message with Meta AI or any of these different AIs for whether it's for fun, you have a question about something, you want help doing something, you want to play a game, or you want to message with a business for commerce, or you want to engage with your favorite creator and they wouldn't normally otherwise have time to message you back, but now they have an AI representing them that can, and that will accrue to kind of to messaging behavior. It's going to change advertising in a big way. It's going to make it so much easier to run ads. Businesses that basically before would have had to create their own creative or images now won't have to do that. They'll be able to test more versions of creative, whether it's images or eventually video or text. I think that's really exciting, especially when paired with the recommendation AI. On the hardware side, I mean, obviously the smart glasses that we just rolled out, we sort of thought were a precursor to eventually getting to displays and holograms for augmented reality, and I think we will eventually get there. Still, it's not that far off, but I think that now the ability to deliver AI through smart glasses may end up being a killer use case for that, even before you get to the kind of augmented reality type of use cases. So I think you're basically seeing that there are going to be. This is a very broad and exciting technology, and frankly, I think that this is partially why working in the technology industry is so awesome, right? Is that every once in a while something comes along like this that like changes everything and just makes everything a lot better. And in your ability to just be creative and kind of rethink the things that you're doing to be better for all the people you serve. I mean, I just think that's a lot of what is energizing and fun around building companies like this. But yeah, it's hard, sitting here now to be able to predict like what the metrics are going to be around, like what the balance of messaging between AIs and people, or what the balance in feeds between AI content and people content, or anything like that. But I mean, I'm highly confident that this is going to be a thing, and I think it's worth investing in. To the question about efficiency and costs, I think initially it's most important to focus on getting to product market fit. And we obviously care a lot about efficiency, right? I mean, the CapEx costs for our company are very significant, and it's one of the main things that weighs on the economic model of the company. So on the one hand, as we can improve the efficiency, we're able to do things like train bigger models and serve more people, which currently right now we're going to be bottlenecked on based on the amount of infrastructure that we have as this gets to the scales that we aspire to get to. So in the near term, the efficiency wins will primarily just be to deliver better products to more people. But over time, we're going to continue working on that. And I think we've been able to do pretty good work on efficiency on our hardware and compute. And, over the long term, once we kind of have more of an understanding about what these products want to be, then we'll be able to drive the economic model based on that. But we'll work on that all throughout. But I think we're still in the pretty early part of that curve.
Great. Thank you for joining us today. We appreciate your time, and we look forward to speaking with you again soon.
This concludes today's conference call. Thank you.
All right, guys. So that is it for the Meta earnings call. Again, really interesting call. They talked a lot about AI. Meta hasn't really reacted super favorably to it. We're mostly flat from earnings today, and that's bad news for the market, which really kind of needed the market really kind of needed a green day. And so Amazon tomorrow, GDP data tomorrow morning. Be ready. It'll be a really big week. We got PCE data Friday. We got GDP data tomorrow. Just a lot of stuff going on, guys. So again, if you haven't already, hit the subscribe button, hit the notification bell. I appreciate the love. Again, if you want to check out our sponsors, check out Chart Prime. Chart Prime is a trading view indicator service you can use in stocks, crypto, Forex, futures. I've been using this one a ton with my trades. And again, I challenge you to just back test these yourself. Again, if I pull up these indicators here and show you some of these, like the regular market Oracle, you can use this in the NASDAQ, you can use it in the E-mini, you can use it in currencies, gold, silver, whatever you want to use. Watch how accurate this is when you get an engulfing candle, at least one engulfing candle and a reversal signal. You can kind of see it just on this chart. So let's look at every one today. Again, here's the reversal up, bullish engulfing candle, beautiful bounce over like a 30-minute period. Look, here's two bullish engulfing candles and a reversal up signal, beautiful bounce. Here's multiple bearish engulfing and reversal down signals, beautiful drops. Okay, that's 3 out of 3 today that it looks like it worked on me. You got to give it some room for risk. But again, you can keep testing this and watch how accurate. Again, here's another one, reversal up, bullish engulfing candle, beautiful bounce. Here's another one, bullish engulfing candle, beautiful bounce. Now, I found they work the best when they're within 3 minutes of each other. That or when you get multiple engulfing candles. This is a company called Chart Prime. It's a trading view indicator service. It is a sponsor of mine. Check it out. Again, I recommend you backtest it yourself. You can look at the link in the description. You can also check out Top Step if you want to day trade some of these economic reports, the patterns in futures. You can day trade essentially the SPY in what's called the E-mini. You can day trade the NASDAQ, basically the Q in what's called the NQ in futures. And there's no PDT rule. And the patterns are very similar to day trading stocks. There's just no PDT rule. And you can day trade the Q or the SPY or whatever it is, basically with the E-mini or the NASDAQ. And again, it's a great way to learn trading with limited risk. Almost all new traders lose money. And so a great way to learn how to trade with limited risk is a funded account program like Top Step. They give you a demo and they challenge you and they test your skill. And if you could pass the challenge, if you can hit base one's 50K demo. So if you can hit 3K in profit on that 50K demo without losing over 2K, they fund you 50K with a 90% split. They pay out millions, fund thousands a year. Most people are going to lose in day trading. And so this is so much better to do, in my opinion, than putting up the money yourself, because when you put up thousands yourself, you're risking thousands. In this case, the base one's $49. They are a sponsor of mine, though. I'm definitely biased in their favor. And so again, if you want to check out the link, there it is. Great way to help support the channel. And again, we'll be back bright and early tomorrow for Amazon earnings. I'll see you guys later. Good luck. And yeah, y'all have a safe and happy day. Good luck, guys. Yeah, we'll see what the market does. Again, will the market rebound tomorrow? GDP data expected at 4.2% tomorrow. And so it's a very busy day. Tomorrow we have GDP expected at 4.2%. We got jobless claims expected at 209K. We got Amazon earnings coming out tomorrow evening. Friday we got the personal consumption expenditure as well as Michigan inflation expectations and consumer sentiment and expectations. So a lot of stuff going on the next 2 days. And then next week we got Apple earnings, the FOMC meeting. Just a crazy busy couple of weeks here. I haven't really had a break from streaming. And so yeah, it'll be fun. We'll see what happens. And yeah, we'll see if the market bounces back. Answer why it's dumping. I mean, again, look, you got to be careful not to sensationalize the market. I think people who watch the market short term really want to sensationalize it. So, let's take a look at the SPY here. Since everybody's talking about Black Monday or Black Thursday or Black Friday, again, here's the last year. So the SPY is still very green. We've just had a couple red months, which is not crazy. I mean, again, the SPY opened up the year at 380. Right? We're at 420 right now. If you look at a weekly chart, it's even less. So again, I mean, I'm not saying it's not a red couple months, but it's not, the alarm bells aren't ringing yet, And again, I think a lot of the time people who watch the market really short term, like people on my stream, they tend to sensationalize it. But again, we're not there yet. In order for the market to really crash, it needs to drop down to 380. So we would need a dip really all the way down here before it would really be considered a crash. And we're just not there yet. Again, if you look at the Q, for instance, people are bringing up Google. Google has had a crazy good year. Even with this drop, Google's had a great year. Google opened up the year at 80s, 90s. 83 was the lows in November of last year. In 2022, we're now at 130. So again, have reasonable expectations for stocks. They're not going to go straight up. We'll see what happens. Definitely bearish, though. Certainly bearish. Amazon earnings will be a big influence. We'll see what happens there. Love you all. Y'all be safe. I'll see you guys tomorrow.